tips and tricks you can do, especially if you get an agent like that who's an investor. Is that agent an investor?
Both the agent are investors.
Okay.
Yeah.
Yeah. Well, I was going to say, I think statistically, people can chime in if this is right or wrong, but I think statistically speaking, I would guess and have heard that most people that start off in real estate investing start with single family, just because of
Okay.
the learning curve, yada yada. Now there's those like Cody that goes out and buys a, I think he had a single family or whatever, but he jumped right into a big multi-unit thing. Good for him, and young kid and all that. And there's people that do it. Don't get me wrong, but I think most people would probably say most people. Now, whether that's good or right for you, I don't know. I'm just saying that's probably the average or the most people start with single family.
Yeah, that's what I heard most of people, at least just have a few investment properties, tell me that's a little bit, probably a little bit easier to deal with. At least you don't have to deal with tenants, like having problem with each other or something like that. Single family, you just rent it out to one entity, or
Yeah.
they can figure out themselves. Yeah.
Yeah.
So
Cool.
That's what I said right now.
Okay. It's a pretty light crew today. We're 20 minutes in, and there's what we got 1, 2, 3, 4, 5, just 5 of us. So Ryan's out doing his walkabout. Mikey's, are you in paradise or where you at, Mikey? You in Japan or you in Hawaii or?
He's so far away, the sound doesn't work.
sorry. I'm in Hawaii.
Oh, nice.
Yeah.
Did you hear Zuber's podcast today? He said that's the most expensive place to retire. So.
Oh yeah, that's the truth.
And I have a quick question. I'm like watching. I purchased a course from Women at a Time. So I'm looking at the seller financing. Very interesting thing. And they say seller financing is not what you can find, is what you can create. And anybody who has some tips and how to find, because I was playing around with the Bride Investor. I think Zuber and whoever is the creator for that app, the guy, and it's very interesting. You can search for different like the houses who the owner is out of state or things. It's very interesting, but it took me a really long time. I felt like I was getting really busy after using that app, and I didn't know I'd go anywhere, but it was just really fun to search about who owns the property and who is the owner. But anybody who has stories about seller financing, how you guys find out those deals?
I'll throw my hat in the ring. I haven't had a chance to explore that tool. I simply was looking at units that were on the market more than 60 days. I was looking at the selling history if it hadn't been sold or bought, in at least 15 years. And then I would have, I'd have the agent kind of inquire, how much debt they had on it. The other thing I did is, I just did my first seller financing is I did end up getting a mixed use unit. So it's we're converting it into a residential duplex, but right now it's one commercial office and one apartment. And obviously you can't get conventional loans on those. You have to go commercial, which I think scares off a lot of people. So that was the other, that was the other flag. Like, so it's been on the market a while. It hasn't been bought or sold in a while. The buyer bought it in cash, or they haven't, the mortgage has been mostly or entirely paid down. And it's, it was a type of asset that was difficult for most people to be intimidated by trying to finance it. So food for thought.
Thank you, Chris. And another question is about, just one other multifamily agent, like multifamily investor, like agent told me about the conventional loan, commercial loan, and he actually told me that commercial loans is much easier to deal with.
All day long, true, absolutely. But I mean, literally, I would tell you, commercial loans are better in every possible respect. You build a relationship with the local bank. Once you get your personal financial statement in the first one, in some cases, they're bringing me deals or introducing me to other investors who want to sell. The amount of pain and suffering to get the loan through after the first one is ridiculously small. They're very easy with pre-approvals. All that's great. The only thing you got to be comfortable. And by the way, I was getting roughly the same rate I would get on a 30-year. And I was not, and they were not pushing me hard on how much I had to put down, different than a conforming, not as owner occupier, but as an investor. The only, and you used to, not in the last 2 years, but you used to be able to do 5, 7, or 10 year. Most of mine are commercial, but they're 7 or 10. I think I have 1 5-year. But the risk factor is you got to be comfortable with that 5-year reset. So the interest rates I was getting wasn't much different than market. So worst case, if the period ends and I have to refinance, I'll probably get roughly the same rate I'd get if I went into a 30 at that point. But but there's a risk, right? You have a 5-year, you're only protected for 5 years, right? So you have to kind of play the cards. Like, I looked at it and said, look, the rates had already started to go up and now are starting to go down. So do I think my first one expires in late 26 and the rest expire in like 28 or 29 or I don't know, or something like that. And, so, I think that my risk of getting in a worse position, even if I'm a little worse, I can handle that. But all that being said, like, I also, when I started going down that road, I wasn't aware you could do 30-year. I wasn't aware I could do 30-year debt on non-conforming assets, like more than 4 units or something that, you couldn't use conventional 30-year loan for. So I will probably pursue that as I get closer and the interest rates come down. I'll probably try and flip it into a 30-year, non-conforming type of debt, but I haven't done that yet.
Is that through Convoy, or do you know who's the lender on that for the 30-year fixed rate on multifamily?
I think it might be. It's what Zuber talks about. I think it might be Convoy, but I haven't really gone down that road because the interest rates, I still think I don't have to pull the trigger for another 2 years and the interest rates aren't really attractive yet. So as we, if once interest rates hopefully get down in the 5s or, something like that, I'll probably look to convert some of it.
Yeah, that's awesome. I think they said up to an 8 unit. I could be wrong, but that,
Yeah, nothing for me is large. None of mine are larger than 8, but I do have one or two mixed use buildings. So I have to see if they'll cover that.
Yeah, that's a phenomenal thing. I've seen some around here. They don't work out anyway, but they're like 6, 7, 8, units. So I was like, man, that'd be cool to pick those up for a deal and get fixed rate on it. But
yeah, numbers
just still don't work. So
I would say if you've got an attractive day job, right? If you've got a decent income, and if you and the other thing is, conforming loans, you can't do, the commercial guys will do construction loans and they'll kind of, you can do all that stuff, right? So just gives you more options. But